Hello, this is Dr. Schamberger, and in this talk, we're going to focus on the annual report, also known as the 10K. Remember, the annual report is a document that public companies must submit to the Securities and Exchange Commission. So let's get started. So we're going to focus on a few things inside the annual report. One of the things that we'll just talk about really briefly, in fact, just right now, is the auditor's report. That is what the 10K will include. You want to look at that. And the reason why is because the auditor will make a decision as to whether their financial reports for the year were clean. In other words, were there any major discrepancies in reporting practices that need to be brought to the attention of the SEC. You also want to make sure that the auditor's report is a qualified report, that it did indeed come from an auditing firm. Many financial statements will be included inside the annual report, and we're going to focus on really three of them. There's also the footnotes, and we've talked about how important footnotes are in financial information. And then the management's letter. The management's letter is going to include, it's not going to be a long letter, maybe 2 or 3 pages, but sometimes it will document some of the, maybe some issues that the company might have faced in the past reporting year, maybe some things that, maybe some changes that have occurred that could have influenced some of the financial information. So that's a good thing for you to look at to get that overview of the public company. So the main documents that we're going to focus on inside the annual report are these 3 particular statements. One is the income statement, second is the balance sheet, and the third is the cash flow statement. So we will look at each of these starting with the income statement. The income statement is going to cover a period of time. So for an annual report, obviously a year. In addition, the income statement will include not only just for the year, but also include the 3 months for a quarterly report. The reports, this particular statement reports income from ongoing activities. So looking at sales or revenues. And then it's going to involve estimates. So it's not going to get down to the penny, but it's going to basically put together some estimates for anybody in the public to be able to understand. Now, in looking at the basic income statement, like I said, it's going to report the sales or revenues depending kind of on how that public company, what exactly it does. If it's a service, we're going to talk more maybe about the revenues, but if it's an actual company that sells products, then they'll look more in sales. But both are pretty much about the same, but just depends on the context of the public company. Your basic income statement also will show the expenses. So expenses for the cost of goods sold, the sales, general, and administrative cost as well. We're going to talk about those 2 things in just a few moments. It's also going to have a line item for the taxes that paid out. So when all of those are done, starting with the sales or revenue, so everything brought in, and then we subtract the expenses as well as subtracting the taxes, then it leaves us with a net income or profit that we can then use to determine the health of a public company. So let's look first at the cost of goods sold. What does that really mean? We're talking about the expenses incurred in the cost of making that product that the company sells. So if it's a manufacturing company, public company, then it's going to be what that company pays for in inventory. That includes the raw material, supplies, even transportation, the factory labor, any overhead cost, energy cost, everything associated with that particular manufacturing of a product. If it's a retailer, so a retail public company, then we're talking about cost of goods sold as to what the company pays its suppliers for the products that it sells on the shelves. If the public company provides a service only, so they don't really make a product or sell a product per se, so a modest CGS is calculated with that. They can still use some labor cost as well as energy cost, transportation, things like that in order to determine the CGS. Now, SGA, that means sales, general, and administrative cost. So basically, these are all your operating expenses, which includes office expenses, accounting, shipping, advertising, research and development, expenses that really cannot be directly attributed to particular items for sale. So it includes a number of those things. It just depends on how the public companies auditing and accounting departments really itemize a lot of these expenses. So we're going to look inside the box based on everything we've just talked about with the income statement. So when we're looking at a public company's income statement, we're focusing on really what's inside first, that red box that you see, the revenues or sales, minus the cost of goods sold, and then minus the sales, general, and administrative cost. That's going to equal the operating profit. You might want to look at that first, okay? Then we're going to take out some of the other expenses, or maybe even add in some other income that really is not a part of this. Basically, they're going to go through a number of minuses and pluses of other things until we get to that net income. The net income often will be bolded on the income statement, so you'll be able to see it. But that is really that bottom line number that we are interested in determining how a public company might have fared over a period of time. So when we see that number, again, we've got to provide context. That's what we do as journalists. So if you notice that in one reporting year, in the latest reporting year, say of 2019, a public company had a great gain in those inside the box numbers as well as its net income. And then maybe the previous year, because an annual report is also going to show for its past 2 years in addition to the current year, then you want to look at that over time. Has it been growing? If so, why that trend? What are they really doing to make those numbers grow? If we're seeing a decline, what could that mean? So those are stories to pursue, questions to ask, because it might be just infrequent for that company. Maybe it's just going through a restructuring phase, and that's okay, but that could be newsworthy. So those are questions you need to ask, and these are observations that you need to make inside a public company's income statement. So in the next video, we will then talk about the balance sheet. And I thank you for your attention.